Everyone talks about backdoor Roths, but no one actually shows you how to use them. So I'm going to tell you what they are, how to implement one, and then even what it should look like on your tax return so you know you've done everything right. You would need to do a backdoor Roth if you can't contribute to a Roth IRA the normal way. This happens when you make too much money, either more than $146,000 if you're single or $230,000 if you're married filing jointly. If you make less than this, you won't have to worry about a backdoor Roth because you can just put money in a Roth IRA directly. Step number 1 is to make a non-deductible contribution to a traditional IRA. So you go to your brokerage firm, make sure you have a traditional IRA open and a Roth IRA, and then you put in the maximum $7,000 into that traditional IRA. You'll be allowed to elect non-deductible or after tax as the contribution type. And if you can't elect non-deductible, that's okay because you technically get the tax deduction when you file your tax return. So you can make the election then and not deduct taxes for that contribution. Once the money is in the traditional IRA, you immediately make a transfer to the Roth IRA. So this can be a normal transfer or it can be a rollover. Once the money is in the traditional IRA, you then transfer the money over into the Roth IRA. If both of these are at the same brokerage firm, it's super easy. Many of them even have a button that says Backdoor Roth that will do this for you. But that said, you can still do it if they're at separate companies. You just have to do an ACAT transfer to move the money over. You might have to complete a rollover form. So once you've done all of this, you should be able to report all of this activity in 3 different places on your tax return. 2 of these are on the form 8606. Line 1 will show the non-deductible contributions, and line 18 will show the rollover amount. These should be the same number. Then on section 4A of your 1040, you should see IRA distributions for that same amount of money. They should all be the same amount, whether it's the maximum of $7,000 or whatever you originally contributed to the traditional IRA. So here's where things get spicy, because there is this thing called the pro rata rule. And the pro rata rule makes it so that if you already have money in a traditional IRA, it is so much harder to do a backdoor Roth. So there are a couple of ways to solve this. One, you can take the money from a traditional IRA and roll it into your company's 401k if you have one, or you might need to convert the money that's already in the traditional IRA before you can make new contributions and do the backdoor Roth the way I described.